Hey, what's up, everybody? Tim Albrecht here, and welcome to this week's episode of the Ask a YFP CFP segment of the Your Financial Pharmacist Podcast, where we feature questions from you, the YFP community, to be answered by one of our very own fee-only certified financial planners. Please note this podcast is intended for educational purposes and should not be considered financial or investment advice, as we do not know all the variables to one's personal situation when answering a question. Before we jump into today's question, a shout out to our extraordinary YFP financial planning team that makes this segment possible. Your Financial Pharmacist offers fee-only comprehensive financial planning services that are customized to the pharmacy professional. So whether you want to pay off your student loans, make the right investment decisions, or simply build a solid financial plan, we'll help get your income working for you rather than the other way around. You can learn more by visiting yfpplanning.com. Again, that's yfpplanning.com. Okay, this week's question comes from Rachel in Central Point, Oregon.
Hi, Tim and Tim. My name is Rachel from Central Point, Oregon, and I have a question for you guys. I'm looking for retirement account advice. My last company offered 401k contributions, and I established a 401k at hiring. I do not currently have a benefited position at my job, and I haven't been contributing to any retirement accounts since being hired 2 years ago. How do I start contributing to retirement again? Can I contribute directly to the current 401k from my last job? Do I have to open an IRA? What does that even mean? Thank you so much.
Thank you, Rachel, for taking time to submit your question to be featured on this week's Ask a YFP CFP segment of the Your Financial Pharmacist Podcast. Tim Baker, what are your thoughts?
So to answer your question, Rachel, you unfortunately, you can no longer contribute to the old 401k. So as an inactive participant, basically that door slams shut. So you have a few options going forward. With the old 401k, you can typically leave it there and let it just grow kind of at, the dollars that are in there and how it's invested. You could cash it out, which would probably be ill-advised. You could move it over to a new 401k, which unfortunately you don't have. Or you can roll it over to an IRA rollover and then start contributing to that IRA rollover going forward. So most financial planners are going to tell you to roll it over, and roll it over. And that's typically because that's a function of how they get paid. So they'll say, hey, roll over that $100,000 and I'll manage it for you for a fee. Although the advice is tainted, kind of with that conflict of interest, is typically good advice. So I think what I would do, and you can do this yourself, or you can work with an advisor at YFP or anywhere else. They would basically move that account, that old 401k, over to an IRA rollover. We do it at TD Ameritrade Institutional as our custodian, but you could do it at Vanguard or Schwab or Fidelity or a variety of custodians. And then that IRA basically opens a door for you to be able to fund the $6,000 per year, which is the limit. Now, because you're not covered by a current employer's 401k, it doesn't matter how much money you can make in terms of your adjusted gross income AGI, you'll still be able to get that full $6,000 deduction. So let's pretend you have $50,000 of the old 401k. You roll that over into an IRA rollover. There's the $50,000 there. And then if you do it in 2019, you can put a full $6,000 in. And then in 2021, a full $6,000 in and get the deduction on your tax return. So those would probably be the most obvious steps. I think the other things to potentially think about, if you're thinking like, well, before I was maxing out and I was putting in 19,000 or 19,500 and I want to save more for retirement, you could set up a taxable account, so a brokerage account, for the purpose of retirement. Now, it gets a little sticky because you don't get a lot of the tax benefits, that you do that you do with an IRA or 401k, but it's still actively saving money in a way that's going to grow, like an IRA would. And then potentially you could, siphon some of those dollars off and put into the IRA in the future if you wanted to. And then probably the last thing that you could probably do is get into your employer's ear about the 401k. And we've talked about this on past episodes is, hey, employer, this is a benefit that I'm really looking for, to help you with your retention, to help you with recruiting. Mm-hmm. They don't cost that much to actually get in place, more than what a lot of people think. So again, that's something that YFP can help you do is to work with that employer, work with your bosses to get a 401k in place. We've done it at YFP with our own company, mm-hmm. and it's a great benefit for not a whole lot of time, money, or effort. So I would definitely, in your conversations, your review period, say, hey, this is something that, I think we should pursue and in effect change that way. So unfortunately, Rachel, I don't think there's anything that's like snap the fingers and get it rolling, but I think there's a path forward for you to kind of get off the schneid a little bit from the 2-year hiatus of saving for retirement and start with kind of some of these steps that we've outlined.
Great stuff, Tim. I mean, really succinct overview of the options that Rachel has to pursue. And I know we just threw a lot of terms around there. You mentioned IRAs, 401ks, brokerage accounts, maxing out accounts. And for those that are maybe on the beginning journey of learning about investing and investing options, I would point them to episodes 72 through 76 of the podcast, where we did a whole series on investing, ranging from some of the behavioral mindset aspects of investing to evaluating the different options that you have, to understanding those options, to asset allocation, to fees. And so I think that series would be a great place to start, essentially kind of an investing 101 for our listeners. So thank you again to Rachel for submitting your question to be featured on this week's Ask a YFP CFP episode of the Your Financial Pharmacist Podcast. And as a small thank you, we're going to be sending her a super comfy YFP t-shirt. And to those listening, if you'd like to have your question featured on a future episode, please go to yourfinancialpharmacist.com/ask YFP or shoot us an email at info@yourfinancialpharmacist.com. Have a great rest of your day.